This is our Forex blog for Friday, June 12th, 2015. Just a quick blog to go over how the progress of our Forex trading systems. My focus is on finding the highest probability trades, and each day I usually fix 5 or 10 of our older patterns. Well, on good days 2 to 3, but some days 5 to 10 older patterns need additional rules. And then I also add 2 to 5 new patterns. And you can see here how the euro dollar looked on Friday. Nice huge drop here. The market made a higher high here, and we looked to buy this little flag pattern. That was good for 15 to 20 pips on the second trade. You can see the Australian dollar, and one of the things that we do is actually look inside the bars, both on a range bar basis, 30-minute, hourly, 4-hour, daily, and weekly. And we look for where most trading activity happened. One of our indicators is called FX value area, and it looks at every single trade, the tick prices, and sees where most activity happened. And then it looks at where 67-68% of the activity during that 4-hour period was within. And what this lets me see is that here we made a new low, the first new low of the day, and it pulled back. Not only was it a 50% Fibonacci area, but it was underneath the previous 4-hour point of control, the yellow line. This is where it spent most of its activity. During the next 4 hours here, you can clearly see it spent most of its time during the previous 4 hours in this area right here, and it spotted that by analyzing the ticks. It's an incredibly useful tool, and you know, this actually would be a good trade. I didn't code this one up, and we have over 2,000 patterns that it looks for, but it didn't find this one. A double bottom after it made a slightly higher high, right at the previous 4-hour period's lower value area. You'll see that happening all the time. But a human can't look at a 30-minute and hourly, 4-hour, daily, and weekly levels, not to mention daily pivots, weekly pivots, monthly pivots, previous days, weeks, and months, high and low, and all the other support resistance areas that traders use, including Fibonacci areas, which our systems also analyze and look at. And so this is not only a 61.8% Fibonacci area retracement, it was right near the previous value area after just making a new low. So these are high probability patterns that I look to code up. Here's the New Zealand dollar. It made a strong trend, and then it fizzled out on the pullback up. It wasn't able to get above the 62% retracement, and in fact it wasn't even able to get above the 50% retracement. And then it had a little double top right here. Very high probability pattern, and you can see that was good for about 20 pips. A very similar pattern was found in the Australian dollar as well. I might have already shown this. Strong trend down, and a double top after the market made an extreme move down and did not pull back up over the 62% level. In fact, this one also stalled out right at the 50, had a double bottom, and it was good for about 10 pips. But 10 pips add up, and you know, a 10 pip win will get rid of one of the 10 pip losses, or 2 5-pip losses. Here's the dollar Swiss. Was in an uptrend. You can see the slope of the, and I'm always looking at various time frame slopes. You can see the slope of this was up on the, you know, in the last 300 bars here, or 150 bars, whatever. The trend is up. The last, 50 bars, the slope is up. So this was an uptrend. It was in a narrow range. It broke out above that high, and then it made a little bit of a pullback. And this one you can see was in here somewhere around 45 and got out at 79. So that was a 30 pip win, and our counter trend patterns found this reversal here, which also made about 20 pips. I'll finish the blog with showing the pound, and we can go back to the previous day. This is Thursday. You can see it made a nice little trade here, small win, nice win. And a lot of these trades, by the way, don't necessarily look that good unless you look inside the bars and see where these value areas are. They're incredibly useful, but the human brain can't look at multiple time frames over and over again and In fact, this trade right here probably was based on the point of control area. It made a huge new high. It's a 50% retracement right near the point of control. This is where during the previous 4 hours it spent most of its trading time. You can see during this period right here, right here, right here, right here. That's why this was the point of control. And it acts as kind of a line in the sand, because everyone who was short, or tons of people that were short around this price during the previous 4 hours. So when it goes against them, you know they're losing money. It comes back, it lets them get out of their trades near break even. There tends to be a lot of natural buying at this point, and this was already a nice strong move up, 50% retracement right at the point of control. Very, very powerful stuff. In addition to the point of controls, we also use fib targets, and it's about 26 different patterns that we look for and find high probability trades. Here's the stats for last week, and keep in mind this is at the end of the day when I fix 2 to 5, sometimes 10 patterns, and also add 3 to 5 new patterns. But I am trading these patterns live, and so my main goal is to make sure the patterns that hit match the pictures I take when I initially code them up, and also match the notes I take. If they don't, or if my new trading technology would not have taken these trades, I add that code to them, and so they disappear. So this is at the end of the day with a couple new patterns added and past ones fixed. But on Friday it made 296 pips, 73% winning, 23 pips average win, 6 pip average loss. Thursday 298 pips, 61%. And the real key is much bigger wins than losses. I shoot for 17 to 25 pip average wins. Some days we get up to around 30. It's rarely ever over 30. It's rarely ever under 15. Sometimes it probably averages out to around 18 to 22 pips. And the average loss averages out over the last 6 months to about 6 to 8 pips. I tend to spend more time trying to fix the losses that are over 10 pips. And also, as you can see here, I have the stats and the patterns. Every month or so I look at all the ones in the last few months and see which ones are performing and which ones aren't. The ones that have too many losses, or at least aren't 45% winning and or have huge wins. Sometimes I'll let patterns that are only 40% winning stand if they have a lot of 30 and 40 pip wins. I will let them stand. I don't mind taking a bunch of 3 to 10 pip losses if periodically, or at least once every week or two, it finds a big 30 or 40 pip win. And some of them find 1800 pip wins occasionally. So I tend to leave those alone. It's a lower winning percentage, but my goal is for every pattern to try to be 50 to 55% or higher winning. You can see, I guess this was Tuesday, 305 pips, 68% winning, and a very decent average win for lesser than average average loss. And I believe this is Tuesday, 181 pips, didn't do as well. Good winning percentage, big wins, small losses. And this is Sunday, Monday, which is very good for a Sunday, Monday.